Good day, everyone. You're welcome to this week's Business and Investment Tips Program, a production of Christ Church Radio with Ayodeji Ebo, an investment professional. This week, the focus is on the implications of the new CBN's policy on banks' exposure to FX. The Central Bank of Nigeria, CBN, published several policies last week relating to the Nigerian foreign exchange FX market. However, this week, we will be focusing on the policy of harmonization of reporting requirements on foreign currency exposures of banks. We will review this policy and highlight some of the implications for the Nigerian foreign exchange markets. The CBN observed that the banks have been holding significant excess positions in foreign currency in recent times. This can be attributed to the continued depreciation of the naira, which allows banks to book significant foreign exchange gains. However, this can also have a negative impact on the bank's financial position if there is a major appreciation in the naira, which will lead to significant foreign exchange losses. As a result, CBN is setting a threshold that banks' next open position NOP limit of the overall foreign currency assets and liabilities, taking into cognizance both those on and off balance sheet, should not exceed 20% short or 0% long of shareholders' funds unimpaired by losses. This implies that the bank's foreign liabilities should be at most 20% more than their foreign assets at a particular time and ensure their foreign assets are not more than their foreign liabilities, including on and off balance sheet items. This means no excess foreign currency position is allowed. That is, banks should not keep more foreign currency than they require in their position. Here are the likely implications. 1. Banks with excess foreign currency position, more foreign assets than liabilities, would have to sell them to comply with the policy. It's good to note that the time frame is too short to achieve this, but efforts to comply will commence based on the approved extension that may be given to some of the banks. 2. This should increase dollar liquidity in the foreign exchange market or reduction in dollar demand by the banks. It has been estimated that this will increase about $5 billion to $6 billion liquidity in the FX market. The announcement led to significant appreciation in the unofficial market as rates appreciated by 12.2% in 2 days from 1,550 naira per dollar last week Wednesday to 1,350 naira per dollar on Friday. 3. This would impact bank earnings with significant exposure to FX, especially those banks that have booked huge FX revaluation gains. Hence, we may see a major correction in some of the banking stocks towards the second half of 2024 based on their financial performance if there is no opportunity for FX revaluation gains. For instance, GT Bank's FX revaluation gains as of 9 months of 2023 were 72% and 40% of its non-profit income and gross earnings respectively. A reduction in FX revaluation gains implies that the overall financial performance may moderate significantly. However, this also protects the bank from any major downside if there is a major appreciation in the naira. It is good to note that this policy is not a silver bullet to resolve the lingering FX challenges. While this has translated into a significant appreciation in the currency in the interim, there is a need to find more sustainable sources of FX. These sources include increasing crude oil production by reducing oil theft, attracting diaspora remittances through the official channel, and in the long term, increasing non-oil exports. We expect investors to stay on the sidelines for a few days before major demand resumes in the FX market, which may lead to continued depreciation if the required support is not provided to complement this policy. That said, we will continue to emphasize that you should have a portion of your investment in dollar-denominated assets. Kindly listen to our podcast on dollar-denominated assets on our YouTube channel. Thank you for listening. Please join us same time next week for another exciting and insightful session. For questions, comments, and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 07082463747. Stay blessed.